Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Well, good weekend all. Ira Epstein of Linn & Associates with your metals market update for the weekend of Friday, the 28th of April, and that's 2017. Now, the markets are still trading. I'm doing this about 2:20 in the afternoon, but we're dealing with the weekly charts, and that's not going to change very dramatically. As you can see, the gold market continues to hold, from those of you that watch my daily videos, that 200-day moving average of closes. It's also gaining against silver on a daily basis. Copper got a bit of a bid into it for a change. And the platinum down, but the palladium market sharply higher. We're also seeing a little bit of stability right here in the bonds and the note market as we're coming to the end of the trading day, but stocks down just a fraction. It appears also going into the weekend that the Senate and the House came together and they've given a one-week extension on the debt ceiling, which means they're going to have an awful lot of negotiation this week if they want to avoid a shutdown next week. We'll see what goes on. As for President Trump, well, he's still talking repeal of his health care. He is still talking his border wall, but he's not making it part of this part of the negotiation. And Puerto Rico's front and center with health care reforms. Does that get tacked on to the debt ceiling bill? I don't know. They didn't do it today. Let's look at the gold chart and get a feel for what's going on, because for a long period of time, and this is a monthly chart, my friends, the market has been building itself into some type of action. I'm going to use the word some type. The market has a declining high and a rising and ascending low. And it's caught in this trading range right now, if you will, that keeps narrowing in. And what's happening is the swings are getting narrower and narrower. Soon, you will get a breakout on this chart. Which way it comes, your guess is as good as mine. We'll find that out soon enough. Let's go to the weekly chart and see if we can get any ideas, because this chart on the monthly, this is how April's going to end up, and that's going to end up right against that top line of, if you will, this downtrending slope line. On the weekly chart, you'd been coming up, and for the past, you peaked out here, and for this past week, you were down, and you're down for the week so far about $18. So it's been a good setback. On an area chart of weekly closes, that's all this is. This is a weekly chart, and these are the weekly closes. Market came up, right back down. So you can see from your 1287.40 level, you're down that $18.60. The swing line is a study that I wrote, ideally because it helps identify trend and risk. In a perfect situation, which we get a lot of, the market will have higher highs, higher lows if it's an uptrend, lower highs, lower lows if it's a downtrend. No trend is this. You've got a lower low, then the market rallies up here to take out that. Now, should the market next week decide to come up and take out this week's high of 1276.90 and not go back through the low that we have of 1261.80, then the pattern would change to one of higher lows and higher highs. I mention that because as long as you take out 1261.80, all that you're going to do is keep this pattern for the time being. Do we understand that? That is the number that will change the swing line, not taking that out and ideally just starting to move up. That's all that's necessary. When you look at moving averages, you had a bullish crossover right here on this time frame. You did go up and make a new high, and you're getting your first pullback since the bullish crossover. A bullish crossover occurs when a shorter-term moving average, in this case the 18-week moving average of closes in red, went over the 100-week moving average. That's called the bullish crossover. Should the market fall back, these two numbers are a pretty good support area. Resistance, well, theoretical resistance would come in at the upper Bollinger Band now at 1301. Support, as I just said, these two numbers, 1228, let's call it 1207, and real deep support at 1155. Interesting. What else do you see on the chart? Give you an idea of why it's not yet broken out to the upside and not that strong. You still haven't hit this upper Bollinger Band until you go back to last summer in July. So all that time, all you've done is either hit a lower Bollinger Band or key moving averages. Just a point to talk about. Momentum still locked into the upside, has not turned down. So even though the market is correcting, it has not turned the momentum of that down. Momentum is stalled out, and prices have basically stalled out a bit to dropping a fraction. The silver market is different. It made a higher high, a lower low, and even closed under the 18-week moving average of closes, and momentum is pointing down. This chart's the one that's under more pressure than the gold at this point. The copper market has a pattern of a lower low but a higher high. It has nothing going for it. Momentum this week has bounced itself, and it's no longer pointing to the downside, and it might even lead now to prices coming back to that 18-week moving average near the 263.40 area to figure out what it does next. The platinum market does have a pattern of higher lows and higher highs, but what happened? The market met the 100-week moving average of closes, and as it went up here, fell back, came up and actually smacked it last week, got thrown right back. The combination of resistance, 81.5 to 973.5, momentum is still pointing down. And you go to the palladium market, you got momentum that has stayed fairly strong all this way through. The market has not been able to get back under the 18-week moving average of closes since all of this year. This was December. This whole year you haven't been able to get up and stay under it. And now you're touching into or trying to kiss the resistance point of the upper Bollinger Band. Momentum up, not trending, but certainly a spike to the upside, and you see that on the spread. Now the dollar index. The dollar index is in a downtrend. I realize the press keeps talking uptrend. I keep talking it's in a downtrend. Lower highs, lower lows. Even this week's low of 98.56.5 took out to 67. So the market has been supported, past tense and still present, in the sense that when it's hit the lower Bollinger Band, it's run out of that push to the downside, but momentum is still pointing down, and if this market lets go here, you might be headed to the 97.56 level, the 100-week moving average of closes. So as I look at all that put together, I don't see reasons why, if the dollar stays down, gold won't get something of a bid. Gold is also fighting, as you can imagine, with the stock market, because that's where the play has been, not in the gold, and that's where investors have been putting their money, are in the stocks. You see me talk these indicators. Now, let me tell you, we've got 2 booklets of indicators put together by our good friends at Modern Trader. Guide to Technical Indicators, Volumes 1 and 2. I am doing something also that is going to start tying in by the time we get a little later into the summer. And I've begun recording videos. The first one I did is on pivot points, and I'll decide when I want to release it. It's all finished, though. Teaches you how to use them. Then I'm going to go to MACD. I'm going to go to relative strength indexes. I'm going to put you in there and let you see not only how do these work, but how does it work with videos. Some of you may have your own ideas. It's not bad. If I see a video that makes sense, I might even want to put it up somewhere, and I'll have you be sending them to me. So we're going to create something of an area that I think you'll find a lot of fun. You get in, maybe we'll let you do different things in it. It's all coming together. So how do you get all this? It's really simple. It's free. We're going to send it by email to you. You can either call my staff now at 866-973-2077. They'll get these 2 indicators sent to you by email. You can go to our website. You'll see a carousel of free offers. You can come right under us here. On many websites it says click here for Ira's free offers. Click that, fill out the form, away you go. Or you can even click here if you're watching me on YouTube, and we get a lot of people that watch us on YouTube. Just click right up there. You'll see the icon. The form will open. I'm Ira Epstein. You have yourself a great weekend, and I'll talk to you all Monday.